What's up, my Mind Your Money business folks? It's me yet again with another video of today's stock market news. And as always, hopefully you're in the market and not trying to time the market because that is simply impossible to do. So let's see what happens today. Again, I am reporting late. I'm in Hawaii. So it says here the S&P 500, Nasdaq both notch record close as inflation report gives Fed green light to cut rates. So let's see what all happened today in the market. It says both the S&P 500 and Nasdaq Composite closed at fresh record highs on Tuesday after a tamer than expected inflation report raised the possibility that the Federal Reserve could cut interest rates next month. The broad-based S&P ended the day up 1.13%, while the tech-heavy Nasdaq Composite was up 1.39%. The Dow was up 1.10%. So Tuesday's fresh inflation data release reassured investors who have feared that President Donald Trump's broad tariff policy could spike prices in the U.S. economy. The consumer price index rose 2.7% on an annualized basis in July, while a Dow Jones estimate had called for a 2.8% rise. So-called core CPI, which strips out volatile food and energy prices, increased by 3.1% year on year, slightly more than expected 3%. So expectations for lower rates soared following the report. Traders are now pricing in a 94% chance of a rate cut next month, per trading data from the CME Watch Fed Watch tool. That's up from 85% chance before the data release. Traders also increased their bets on rate cuts in October and December. So it looks like a bit of Goldilocks right now for the stock market, said Tom Halen, National Investment Strategist at U.S. Bank Assets Management Group. More and more people are expecting a rate cut in September. So rates kind of on a downward basis, earnings on an upward bias. That's a pretty good environment for the broad stock market. Small caps, seen as a big beneficiary of lower short-term borrowing rates, led the rally with the Russell 2000 up nearly triple the gain in the S&P 500. Tuesday's moves comes as traders weigh the latest developments on the tariffs front. Trump said Monday he'd extend a 90-day pause on higher levies on Chinese goods. So Wall Street will also parse Thursday producer price index report for a reading on wholesale inflation. Both reports could come ahead of the Fed's Jackson Hole gathering at the end of August and the central bank's September policy meeting. And that's pretty much it, people, for the market. Yesterday I was in the red. Today I was actually in the green. I gained back what I lost yesterday and some, which is a great thing. That's why you have to be in the market. You can't time the market. I will say, I was talking to someone today. It's interesting how you meet people when you have certain things in common. I remember having a conversation with someone that I met at the summit for the very first time and talking about investing. And he started talking to me again today about the stock market. And he was saying how September is historically one of the worst months to invest in the stock market. And he was thinking about, he said he's going to trim some of his gains from his portfolio. And so I said, okay, I'm going to look into it. And sure enough, it says September historically has been the weakest month for the U.S. stock market, a phenomenon often referred to as the September effect. And he also said the same about October. So let's see what. So October is most often associated with heightened volatility. So again, we had a conversation, and then some other guy heard us talk, and we started talking about investments. and it was a good day. It was a good day. But even though he told me that and I trusted what he said, but I still wanted to verify. Trust, but always verify people. So let's get into. I don't know if I don't plan to touch any of my investments. I always let things ride out. I do like Warren Buffett says, just let it ride out. So my S&P 500 ETF SPLG gained 82 cents today, closing out at $75.62. Broadcom gained a whopping $8.93 today, closing out at $312.83. Palantir gained $4.29 today, closing out at $186.97. Tesla gained $1.81 today, closing out at $340.84. Tesla. I was listening to a podcast that had Kathy Woods on it, and she was talking about Tesla and where Tesla could be in the next 5 to 10 years. And she thinks the stock price is going to explode at some point. I don't know, but that's what she said. FTEC, my information technology ETF, gained a whopping $3.34. That's a lot. That's what it gained today to close out at $210.12. Nvidia gained $1.01 today, closing out at $183.16. Meta gained $24.13 today, closing out at $790. Apple gained $2.47 today, closing out at $229.65. Yeah, so that is it for today's stock market news. Hopefully you guys are investing. If you're not investing, you should start investing. If you're in debt, get out of debt. Get out of personal loan debt. Get out of student loan debt. Get out of credit card debt. Get out of car loan debt. Debt holds you back. Debt takes your money away from you. So get out of it. And the only way that you can get out of it is by creating a plan. Like how you plan to watch different TV shows, podcasts, you plan to go out, you plan a budget. Create a budget so you can start telling your money where to go. You have to have discipline and start getting rid of your debt, people. Start paying off your debt. And when you start getting out of debt to pay off the credit card, car loan, student loan, stop all investments. If you're investing, stop all investments. You want control of all of your cash. Don't worry. You can start investing again once you get out of debt. Then once you get out of debt, you paid off all of your debt, then you can start investing 15% of your income into your retirement plan. It's not a problem. You have no debt. You can put away 3 to 6 months of living expenses in your emergency fund for emergency. The car breaks down, the hot water heater goes out, you need some furniture, there's a leak, in the floor, the roof, you have to get it repaired. Either way, you have that emergency fund. Then you can also put money into your kids' college fund, your 529 plan for your kids. Start all that. You can start investing in your HSA plan. Then, if you have a mortgage, you can start chucking all of your money, that free money that's no longer going towards debt, towards your mortgage. If you don't have a mortgage, you don't have to buy a house. You can continue to rent. It's up to you. It's not a problem. But if you do want to purchase a home, save up save 20% of the price of the home. 20% of that purchase price. Say if the home is $400,000, you save $80,000. And you put down on that home and you finance that home for 15 years instead of 30 years. You save yourself a lot of interest. And then because you have no debt and you only have that mortgage, you have all this cash, you more than likely pay that home off in 5 to 7 years. And now you're debt free. You can invest more of your income. You can do what you want to do. It's like I'm in a place now where I'm trying to figure out what I want to do because I've been debt free for so long. I don't want to get in your mortgage, I don't look at mortgage as a debt. But I'm thinking about buying another home. Just thinking about it. But I'll figure it out. I may just continue to rent. But you just have to think it out, write it out. Again, it's all about your budget. So yeah. So that's it. So I'm going to end this video here because I'm going to go for a walk, get some sunlight, go walk on the beach. Yeah. So like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. Oh, disclaimer, I'm not a financial advisor, nor am I pretending to be one. So any and all information on my channel is for entertainment purposes only, and it reflects my opinion. But I want you guys to start thinking about your future. Start thinking about your now. Start thinking about the legacy you want to leave behind for your kids. So yeah. All right, so you guys take care. Have a blessed day. Peace.